6:11 a.m. Pacific Standard Time, 5/11/2012. We have a gap down on the Jamie Dimon news, and the futures have been sharply down. And once again, we've been featuring bull tops, and I'm just saying that every bull run has a calendar yearly high top, and we've identified it, and we've traded every one of these indexes and how counter trends work in bull rallies and how bull rally reversals, price volatility would increase extremely. It was forecasted to everybody, as it was back at the end of March, and that price volatility was going to increase and that the bull was not ready for it, because they weren't. We were, because I taught you how. And now we are in a phase 2 topping pattern of a stage 4 at the current levels in all of the indexes, MMTs, and this is pre-market. We're getting ready to make a market on the options. Here's that 610 put, but more importantly, I've got a 560 call on Apple. That's 1075 by 1090. I'm going to start bids down there right around $3.70 even, so put it there. And keep your stop right around that 350 handle, because there's another market, because it's Friday's options weekly expiration. And I'm sorry about the headset, because it's the way that it transmits. That 615 got very cheap. Here's the one that we were trading yesterday, and we made markets on the low on the 620, but they were not given a lot of premium, option dollar price premium, because they weren't. So we're going to look where the people are going to, why would Google follow its peers, its other leadership peers like Apple and Priceline. Priceline, I'll feature it right now. Close at 681, right down here at 668. I'm a buyer down there around, wants to come down. I hope it comes down to 662, 660 area, as I said. And that would be the beginning ground that I would look at trading this net long very quickly off the bottom when it holds. And I would get over and I would look at the price line. I would go look at the 680 call for the first round. Yes, it's still out of the money. That's fine. That's how you're going to bounce and go back up and break through that closing bell of 681. Once you come off that bottom, you come off of there like a steamroller. You're going. And at some point, you're going to start putting in a new bottom base. The price volatility that I have forecasted, as I have, that's both sides. That's the long side and the short side. And identifying that today's price range is key, because it is. So when you're looking at going long and short, this is what you're here to do. So basically what I'm going to tell people is, how do I get in that 620? He's got a gap down ratio of 613 to 608, 609. Now, when they come off the bottom on that name, just like they will with the Apples and the price lines and most of the left elbow gap downs, there's two kinds. There's that first entry and it takes off, and or there's an entry with a tight stop and you have what we call a sell down, runaway gap down in price to the lower level of the pricing component in your MMT platform, which at that point in time will have you ready to make your entry and your exits. We are going to be working with the 605 call. We're going to be working with the $600 call. These calls got inflated and they were being sold short by market makers. And now they're going to gap down in value. We're going to watch the premium on the opening bells. We're going to watch and see if this thing holds above 672, 602.75. and that when you hit that bottom support level, do you get that $10 bounce like it likes to do and has been doing? So I'm being told by some MMTs that the short interest on the indexes are at all-time 2012 highs as well within the bull rally cycle. So you've had a lot of bears move in against the bulls, which is fine. Who cares? That's the public model. You're going to make a market. So when we come down and we hit those lower support levels, we're going to see if they will steal the premium right here, my friends, my MMTs. And this is live before the opening bell. It's how to make a market and get paid. And it's a different way. And these are options. I'm going to be watching these puts, because what I'm going to say on the first pass, if they're going to steal premium here, I'm going to put my bids out here. I'm going to put, because if they steal the premium, it's Options Friday weekly, and they do steal premium. Even though you got this $5 gap ratio down, that's all that is. I'm still going to line this bid no higher than $8.20, just in case they steal the premium, because of that left elbow gap down. And I'm only going to do 5 there, but let me tell you that that's a markup. So that's a 50-cent markup from the close on the option. That's still wholesale on that put if they steal the premium. All right, the 610 put, well, hey, I'm going to maintain that I'd like to get at least 200 contracts at 25 pennies throughout the day with a bid here. And a lot of people don't believe they can go that way. Well, I'm sorry, I will prove it. I don't talk, I prove it. And I'd like to buy them there. And that's what them taking all the premium out of that $1.55 close and getting those things down there to 25 pennies now. And this is pre-market. And the time is 6:19 a.m. And it's live. And it's real. And it's here. And it's now. And it's about stealing that bid. So I'll put the bid out there on the 610 put. Put it out there at 25 pennies on 200 contracts for now. We should really have 500 at 25 pennies, because that really makes money, because they go up $1. It's $50,000 intraday profit here in the 610 if the criteria is met. The 615 on that other hand, they're going to gap that up to a premium. They're going to gap it up to a premium. And they're going to gap up that is 620. But you know what? We're going to keep the bid out, marking the premium up to 820. Yes, it's $50 more based on the gap down ratio, but we really won't bid it any higher than that for the open. That's on this put side. Now let's get back over here. 25 pennies on the 610 on this one. All right, let's get down here, MMT, and let's start it at 80 cents. 85 cents on the 615 put. Yes, the stock is gapping down. Yes, the 615 put closed at 380, but it's a weekly expiration, and the market's going to open up in 10 minutes. And this is live, MMT, as you're sitting here with me every day getting that wholesale bid. So let's get those bids down there, only for one reason. Because the day is long and the news is out here. The shorts and the sentiment is finally changing. Look for the fear indicators. Just remember, a lot of that data doesn't work like it used to in the old days, because it is manipulated electronically to read certain numbers that people would make decisions on, or make decisions in your public sector now. The whole public model to the exchange. So let's just have these out there, even though they may gap them up. But if they do a runaway gap, they gap down the call side, you're going to want entries on this side of the market, because they pay debits and they race up. So I've got limit orders out here for now. And on the price line trade, well, it'll be a nice one off the bottom. And I'd have my limit orders down there to buy this one. Left elbow gap down, Jamie Dimon news is out. This is the pre-market on a weekly options expiration. It's live in price. Working with dollar gap ratio down versus dollar gap ratio up. So it's not like there isn't good news, because there is. Anyway, let's get ready for that opening bell. We got 8 minutes. And we're going to go over more options. Arenas, it's a pharmaceutical. They're finally getting a little comeback from the FDA there. So that's a $3.37 gap, that one. The rest of them, we're going to watch the calls and the puts, and we're going to mark them down. We're going to mark them down for the open is what we're doing. We're marking them. We're marking this one up slightly, but we're marking these other ones down, even though they're gapping it down, because they like to take the premium. They'll probably gap the premium up, slide the bids, but this is an options expiration week. Yes, the 610 is slightly in the money. And yes, they got down to my price levels that I had the other day. They marked them down $3.25. Last print was $1.55. Last print here on the 615 was $3.80. And not to mention the 620. Let's get this call contract here on the Apple trade, because that one will bounce at support. It has a nice left elbow, $7 gap down, and I'm getting ready to opening bell in 7 minutes. I've concluded the pre-market. Futures are gapping down big. It's a Friday. It's a weekly. Support levels will be defined within the bear and the bull side of the tape. Bull and bear. Price action. Let's get ready to make a market.